Hi everyone, it's your daily 10-minute business and finance news wrap for this Wednesday, the 2nd of June. Australia's economy is back at pre-pandemic levels, with GDP up 1.8% in the March quarter to be up 1.1% for the year. So what now? I spoke earlier with senior economist at ANZ, Felicity Emmett. Felicity, how would you describe the state of the Australian economy right now?
Look, it's in really pretty good shape. The recovery has been faster than we expected. It really has been V-shaped, and now with the numbers today, we're really back in the black.
So what's driving the economy in this result?
Look, it really was the private sector driving this result, which is really very good news. We had strong business investment growth. The second quarter of that, we had very sharp rise in housing construction, helped obviously by the home builder program. And we also had a pretty solid rise in consumer spending.
As you mentioned, the economy is now larger than when it was pre-pandemic. But isn't the reality that a lot of this recovery has been inflated by government stimulus? So, I mean, are we as productive as we were back in 2019?
Yeah, look, that's a good question. I think certainly the economy has been really helped by the stimulus, particularly the support through last year that helped to build that bridge for the economy and particularly for the private sector. And even now, the strength that we're seeing in business investment and housing construction is clearly being helped by the different programs, the instant asset write-off and home builder that the government has in place. So definitely the stimulus is helping. Low rates are obviously also helping. But I think though the leading indicators suggest this is going to continue, and we're bringing the labour market with us. That is really improving quite strongly. And so I think the recovery really is on quite firm footing at the moment.
These numbers predate the end of JobKeeper, and now we're also seeing people starting to draw down on their savings. The household saving ratios come down a bit. How much wiggle room is there for consumers to keep accessing this money to help grow the economy? Because we heard for so long that, it'll be okay. Consumers have got $100 billion in their bank account of savings.
Well, that's right. There still is a lot of room there. Actually, we were surprised that households didn't lower their saving rate more. Income rose pretty solidly, but consumer spending didn't rise as much. So there is a lot of wriggle room still there. The saving rate now is just under 12%. But when we look back prior to the pandemic, it was running sort of in that 5 or 6%. So there is a lot of room for households to spend a bit more than they earn. And as well as that, as you said, they have, a real war chest of savings in the bank. Deposits are up 140 billion from this time last year. So there is really a lot of potential for those extra savings to really drive stronger consumer spending through this year. The thing is, though, we have to find something to spend our money on. And I think with the borders closed and everybody's bought a new car and everybody's bought a lot of retail, and services are limited. There are only so many times you can go out for dinner.
Growth, though, is slowing compared to the previous quarters. What do you see as the biggest threat to this ongoing economic performance?
Yeah, look, the biggest threat continues to be the pandemic itself. And, you can see that at the moment with the lockdown in Victoria, the extension of that lockdown that we've seen being announced. And now the economy doesn't have that underpinning coming from JobKeeper. So there is a risk that consumers do tighten their belts, that they become more anxious about the outlook. There's a risk that businesses sort of delay hiring plans. So the pandemic itself is really the biggest risk. And so that just really highlights that we really need to get this vaccination rollout going so the economy can open up and people can feel safe about that.
Felicity Emmett there, senior economist at ANZ. Quick look at the Australian share market. The S&P ASX 200 closed at another record high today, 7,217.8. That is an increase of 1.1%. Energy stocks were the best performers. Santos up 6.5%. That's as the oil price jumped overnight. Tech stocks and healthcare, though, they were under pressure. I'm Ricardo Gonçalves. You can follow me on Twitter and Instagram at Business Ricardo.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.